Hello traders, Cousin Vinny coming to you from theclosingprint.com, July 5th, 2021. In this edition of your weekend video newsletter, we'll discuss the indices where the US managed to close higher last week thanks to growth, while the Asia and European markets closed lower. Big cap tech stocks led last week. While most of our indicators turn neutral, we have 8 neutral, 8 bullish, and 4 bearish going into this week. The biggest takeaway is most likely breadth, which is seeing fewer stocks participating in the current rally, with the Nasdaq up 7 weeks straight without a respite. That would be the most we've seen since 2018 and 2019. Sectors heat maps improved somewhat with technology, healthcare, and utilities leading, while once again international markets were fading last week. We'll look at some IBD 50 names, a shorter list this week, in addition to stocks from the relative strength at new highs and stocks on the move that institutions are buying in green. While with the scans we have stocks showing oversold conditions with stochastics in white, and stocks where we have the 9 and 50-day crossing, bullish in green. Volkowski has 505 green with a CPI signal neutral at 51.4%, with 18 bearish patterns, 19 bullish patterns, and 375 patterns waiting for breakout. Bottom line, the S&P 500 Gamma did roll higher to 4,400. We do issue some caution going into Tuesday as usual after an OPEX. Dealers will be taking hedges off, so we'll look for direction on Tuesday morning into Tuesday noon. S&P 500 support 4,200 and resistance at 4,300. The S&P 500 finished the week on a high note. For a second week, we rallied. So we're only 2 weeks into what could be a follow-through. Previously, back in March, we had 4 weeks up, and then we went sideways for 2 weeks, extending for 1 more week before pulling back. While we managed a 9-week rally with 1 period of consolidation back in June and July into August of 2020. So that's the most recent occurrence. The reason I bring that up is due to the 7-week rally in the Nasdaq 100, only 100 stocks versus 500, and what I mentioned in the opening monologue, which is breadth needs to improve in order for this rally to continue, which leads me to anticipate there could be some volatility this week after dealers take off their hedges with OPEX expiration on Friday. So we'll be looking for direction in the first couple of hours on Tuesday. For now, the Nasdaq looks pretty solid, 7 weeks with increasing volume, trading in an area of no overhead supply, all-time highs, with the most weeks strung together back in 2020 of 5 weeks before taking a respite and pulling back. As growth continued to move higher, the ratio remained persistent and strong, as you can see, with growth closing on a very bullish candle, while value still manages to stay above the 21-day. Now, there was strength in utilities, especially electric utilities and energy. Last week, we'll want to see a follow-through in that, as well as financials and industrials to help value pick up where it left off last week. For now, growth is extended and potentially could see a pullback on Tuesday. The Russell 2000 small caps finished the week with a little bit of trepidation. We're still near the highs, and we note the wicks down below. 220, 215, 210 in this zone here where a lot of the buying came in, and we're in the upper half of this zone. So we want to see a breakout above 233.75, 234 to indicate risk on. If there's any weakness in IWM, view that as risk off. in this asset class that we use as an indicator. In addition to small caps and junk bonds, we have IBB as a fourth component of our indicators. We'd want to see this trend continuing. It looks like it might. With Biotech showing strength last week, it did close on a red candle on Friday, but for the majority of the week, we did hold the trend above the 9 EMA. So if you're bullish, you want to see this trend continue. We also need to see the S&P 500, the mid caps, small caps, and the Nasdaq advanced decline percent moving higher. Here you can see the mid caps in the upper panel and the small caps breadth thrusts have been moving back towards zero, whereas the Nasdaq rallied and the S&P 500 showed something of a plateau. We're not near plus 30%, so we're not exhausted and overbought, but we do need to see these all moving higher to start the week. In addition, if we see the McClellan oscillators starting to turn, you can see a modest negative reading in the red in the background to end the week. The black line continues to drop, similar to what we're seeing in the Summation Index, NASI, which is sideways but still bullish above the zero line, while the NIMO, McClellan oscillator for the New York Stock Exchange, also shows a negative reading and a downtrend in the black line or moving average, with NYSE, the Summation Index, moving sideways pretty much since about May and June of last year, with a few higher oscillations, but mostly just moving sideways. This Summation Index, a very simple calculation, is above the zero line, and the black line, the moving average, is starting to turn higher, with the New York Stock Exchange advanced decline trying to hold on to new highs. We need to see these moving higher this week, with VIX remaining on a bullish or green signal. This does show the VIX in a downtrend. The descending 50-day moving average is the blue line. VIX closed at the pre-COVID levels that we saw back in February. For now, this is bullish and extended on the downside. And if we consider the 3-month volatility index versus the VIX, the front month, we can see that we're in the red zone. Previous attempts at this level led to short-term tops. Deep moves down towards 0.75 had led to extended moves to the downside for 2-3 weeks in each case during 2020 and 2021, so we need to be very aware of this. Yet another reason to be cautious going into this week. Finally, we have about a half a dozen reasons to be cautious on growth stocks this week. This is the Nasdaq Cybersecurity ETF, near highs. Relative strength is just off of 70. We have the First Trust Dow Jones Internet Index also at highs extended. RSI above 70. IGN, the North American Tech Multimedia Networking ETF, at highs. RSI drifting a bit lower. North American Tech Software ETF, which is at highs, extended. Possibilities for a pullback are the breakout zone, 382 Fibonacci, and the 50-period moving average. We're a bit overbought at the moment. Together with the Internet of Things Global ETF, also at highs. RSI is not yet overbought, with price action a little bit extended from its 50-day. And the Semiconductor Index, which is at the top of its range. RSI is still drifting a bit higher, so there is a possibility for these to move for another week, but we're starting to stretch it on week 8 for the Nasdaq 100. Looking at bonds, the S&P 500 in the upper panel, and the ratio between the 10-year bond and the S&P continues to drop. That's bullish for equities, similar to what we saw in late 2016 into 2017 when the S&P 500 continued to rally. This ratio dropped, telling you that equities were favored over bonds. That said, we've seen all duration bonds moving higher as the S&P also moves higher. Together with junk bonds, the high yield bond ETF is at the top of its Bollinger Bands. Note the Bollinger Bands are opening up. Both HYG, high yield corporate, and junk bonds are moving higher. That's bullish for equities as well. Note the 65 period moving average accelerated in that direction over the last 5 weeks. Therefore, we have bonds moving higher along with the S&P 500. Is that unusual? Not really. I mean, we've seen periods in the past where bonds have risen as well or grinded higher, like back in 2017 while the S&P in the upper panel continued to move higher, and 2019 as the S&P 500 rallied in addition to bonds. So bonds alone are not a reason to think the markets are about to roll over, though we do tend to see that as a safety trade of sorts. So just keep an eye on TLT and all duration bonds this week, going into what is seasonally one of the strongest months of the year for technology. We also saw the US dollar moving higher last week, creating a new high in the short term during the month of June, which would put pressure on international indices. As we can see with the US dollar Japanese yen pair, which is still in this upward channel that we've seen for 11 weeks. This is generally accepted to be bullish for equities in the US as the carry trade or the strength in the US dollar persists, while at the same time seeing weakness in commodities. In this case, copper looks like it's putting in a higher low. This would be bullish for construction related names and generally accepted as a leading economic indicator, as we've seen in the past, 2008, 2009, again in 2016, 2017, and most recently 2020 into this year. We are flagging on a monthly time frame, which we would want to see at least move sideways or preferably continue its trend, while acknowledging this is at the upper end of its range for the last 20 years. We'd also want to acknowledge that the safety trade might be coming back in as a potential position trade over the next few weeks. If this base holds and we start to move higher, that would be a higher low or a higher base to push off of. We can see RSI is rising, compounded by what we see in silver, which is based for over 2 weeks, is now starting to show signs of moving higher. So this would be a safety trade to consider in both gold and silver going into the summer months. Watching sector relative strength in IBB, Biotech, Communications, XLC, Technology, XLK, Consumer Discretionary, XLY, and Healthcare this week, while real estate, transports, and utilities are coming out of bases after a consolidation period, could be looking for follow-through, with these readings in utilities showing us where the strength is. Oil, equipment, and services, Dow Jones U.S. Pipeline Index, the Exploration and Production Index, etc., looking for a follow-through there, while Devon Energy leads the U.S. Exploration and Production Index, most notably with the Conventional Electricity Index showing a lot of strength in these names. So make a note of some of these for potential trades this week as well, as we wait for the first signs of direction from dealers and market makers on Tuesday as they unwind their hedges from Friday. Starting off with the IBD 50 ranked by performance, stocks that are moving higher showing relative strength in this group. And given the situation with the Nasdaq 100 rallying for 7 weeks straight, what I'm looking for are stocks that are trending that have recently pulled back, like Blackstone Group in the financial services and asset management advisory group, noting the bullish Noting sales and earnings have been rising going into this earnings season, which starts on the week of the 12th with banks reporting. We'd like to see bullish follow through and a push off of this level and a continuation of this trend. RSI's turning. We're also watching stocks in the healthcare group, which have shown relative strength. KRDX with a pullback to the 21-day. At a minimum, we need to see one bullish day on Tuesday before potentially taking any kind of trade here. Looking for a bounce. RSI is right at 50. That would turn as a function of price. Again, looking for strength in healthcare this week. And biotechs. CRNC, which isn't something that I'm really interested in chasing, but I do note that strength in this industry group and the volume indicate there might be a trend emerging in the automotive software and driver assistance industry group of technology. Relative strength line is rising. Note sales and earnings are climbing, and really nice IBD numbers. Could be better, but look really good. Maybe there's a trend emerging here. Look at names in the group. Competitors, Nuance Communications, Microsoft, Adobe, PagerDuty, Alf as potential trades as well. Charles Schwab is another potential trade. Looking for strength in financials and broker-dealers, asset managers, with Schwab presently in a consolidation pattern for the last 2.5 weeks. And recalling that value stocks took a back seat to growth last week, we did see Cleveland-Cliffs rising for a third day off the 21-day starting on Wednesday, finishing the week with buyers underneath each of these candles looking for a follow-through back up to highs. On Cleveland-Cliffs, have a position in this name only shares at this point, with trades in U.S. Steel noted by Frank and Brother Bill last week. As they look for follow-through, we've got MACD turning, stochastics rising, volume increasing, showing institutions have been present and buying Cleveland-Cliffs. Cloudflare and internet-related names have been consolidating. Many are at highs, looking for a follow-through or a pullback or consolidation in these names, as they are a bit extended. Volume does suggest that institutions have been picking up shares along this trend breakout in the last 5 or 6 weeks. Cowen, another asset manager, this looks like it's going to continue higher. With earnings at the end of July, this company provides research, institutional brokerage, and investment banking services to foreign and domestic corporations, with relative strength line grinding a bit higher, noting sales and earnings have taken a back seat of late compared to 2020. Still, we're looking for a breakout and continuation. CrowdStrike, more software, security related, and internet related technology names, looking for this consolidation to resume higher. While consumer discretionary and retail have been outperforming of late, we've seen stocks like Deckers, in addition to my favorite Target, which continues to trend along the 9/21-day at 52-week and all-time highs. So we're looking for these retail stocks to continue. We also see DLO, D Local Limited, a Uruguay-based IPO, showing relative strength, only 5 weeks into its current trend, with the company providing cloud-based payment platforms for global enterprise merchants in 29 countries. Relative strength line is rising. Prior to the IPO, you can see earnings have been increasing. Enphase also rallying and following the trend in solar production and installations in the residential and commercial applications. Another financial name, Evercore Partners, they provide services for mergers and acquisitions. We can see price action moving higher. I would think mergers and acquisitions will continue as we come out of the economic lockdown and start to resume life as normal. A lot of the companies that were floundering might get bought up with good technology, furthering the profits of Evercore. Volume shows institutions have been picking up shares. I like this one a lot. RSI rising, MACD crossing, stochastics pushing above 70. Fiverr, an Israeli-based company in the e-commerce buying and selling platforms industry group, looking for a follow through here as well. As we also saw with Etsy last week, though it did pull back Thursday and Friday, looking for this little pullback to get bought. As we like the industry group with potential for solid growth. Generac Holdings, another name in the solar and emergency power industry groups. Alternative energy, this one continues to move higher. Looks like it's starting to consolidate, maybe a better entry. If you give it a couple of days, I'm watching for a follow through. Broke out on the weekly time frame as well as the daily in the second week, third week of June. Grow generation, looks like this is going to continue higher as well. Seen activity lately in some of the cannabis names as well. HubSpot, technology, and internet-related names consolidating for the last 2 to 3 weeks, looking for a follow-through and continuation of the trend. Remembering that technology, July is the seasonally strongest month of the year. In mode, 3 wicks along the 21-day, looking for a follow-through day. IIPR, Innovative Industrial Properties. If you've been with us for any length of time, you know that this company buys and renovates warehousing properties, installs climate control systems for the cannabis industry group, medicinal and recreational in some states and countries. JCOM, looking for a follow-through, communications group. After a recent pullback to the 90 MA held, buyers stepped up. We got a bullish follow-through day. Looking for a breakout this week on volume. Moderna, trending, always in the news, so it's a little bit headline news risk oriented, but it is trending. So there is potential for this to move higher. Also, potential for it to occasionally pull back to the 21-day or the 90 MA. Watch for opportunities on this one. With Moderna, Johnson & Johnson seemingly leading the groups, along with Merck, Bristol Myers, and AstraZeneca. As we look for strength in the healthcare and biotech group this week. Nvidia at all-time highs, looking for this to pull back in for a potential entry. The company really doesn't have anyone competing with much of their product line. Relative strength is incredibly persistent. Pinterest trending, looking for that to follow through. Progeny, looking for this to bounce off the 50-day this week. Buyers stepping up Wednesday, Thursday, and Friday along the 50-day. Look for a follow-through day on Monday at a minimum. Roku, waiting for this to set up again. We need to see at least a bullish day for starters for a re-entry. Have been trading this one for 9 trading days before exiting, just before it took off. Skyline from previous watch lists, looking for this to trend and just grind, continue higher. Smith & Wesson, waiting for this pullback to get bought. That's a potential entry on a very strong trend, most likely being bought by institutions very heavily. Having this come back in to around 26 or so, 27, 28 in this zone would be a very nice entry. Snap was also active last week. Look for this to follow through, continue higher, as RSI suggests there's more upside and strength of trend. Tempur-Pedic continuing in its persistent trend with the growth in new home sales and people moving out of the big cities into the suburbs, and lots of people moving out of state. Volume suggests institutions buying on the breakout. Translate Bio headed for 52-week highs. On above average volume, MACD above its signal line, RSI showing muscle. Tiger, while disappointing, it didn't break out last week. It could be building a range right along 23 to 24 at the lows. Draw a horizontal. If it gets down there near the 50-day and we do see a buyer or two stepping in, and we do see buyers stepping in, that would be great. And another bank, Western Alliance Bank Corp, has earnings in 2 weeks. Looking for a follow-through. Nice relative strength is rising. We're looking at volume increasing as well, and price action to get back above the 21-day, potentially take out the 50-day in the short term. We're also looking for these stocks to follow through, potentially flag and break higher. This is from the relative strength. Stocks at new highs from IBD, with particular interest in T. Rowe Price and Target. We're also watching these stocks from the IBD stocks on the move scan, stocks that institutions are buying heavily. Note AMD, flag breaking out, looking for a follow through. Most likely it's going to gap up on Tuesday, I would imagine. Looking for a follow through, and most of these, LECO, also looking for a follow through. Nice breakout, continuation in IT, and Tempur-Pedic once again. And finally, these are stocks from a scan that I ran. Positions and candidates that have crossed above their 50-day moving average, the 9 EMA crossing through the 50-day. Looking for a follow through in ABT, CLM, CRF, Evercore, IC, J&J, LAZ, PGR, Ross Stores, riding the trend in retail, SWK, Black & Decker, Stanley, SJX, TJ Maxx, and Union Pacific. Okay, traders, that's going to do it for me. This is Cousin Vinny coming to you from theclosingprint.com with your weekend video newsletter for July 5th, 2021. Look for your watch list later tonight around 11:30, 12 o'clock, midnight on the East Coast, around 9 o'clock on the West Coast. I hope you had a great weekend, enjoyed your 4th. I will see you in the morning. So take care.